What you're looking at is the AI investor sentiment. So how bullish or bearish investors are feeling over the next 6 months. And if you look over the last couple of weeks, right, bears are starting to throw in the towel. And they're starting to throw it in substantially, especially over the past, I'd say, month or two. This week, we're at 24% of people are bearish on the market in the next 6 months. Last week, we were at 21.5%. The historical average, you should usually see this at about a 31% number. That's a very normal number, right? The 1-year bearish high, keep in mind, was one of the highest numbers we've seen in the history of this survey, which this survey goes back decades. This survey, if I recall, goes all the way back to the 80s, the 1980s, okay? That was when I was born, the 80s, okay? We peaked and nearly 61% of investors were bearish on the market the next 6 months. That was probably the biggest bull signal you could ever imagine, right? I can tell you, if you were buying stocks in late September and into October, you made so much money, it's sickening, okay? Absolutely sickening. So bears are starting to get more. Now, the important thing is, I think this is very important, is just because a lot of these bears have thrown in the towel does not mean they've all gone full bull. Some of these bears are starting to come out of hibernation, and what they're starting to do is they're starting to buy some value stocks. Because they're going to look out there, they're going to say, I'm not freaking putting, these bears are not putting money in Tesla, these bears are not putting money in NVIDIA or AMD or any of those stocks. What some of these bears are starting to come out of hibernation and switch to the bullish side, but they're doing so by buying more value stocks, okay? So it's very important to keep that in mind. And a lot of them are just kind of going neutral. They're like, you know what? Okay, I've gotten killed on my puts, I've gotten killed on my shorts, I'm just going to move to neutral now. You know, I've lost enough money trying to short this market and do this and do that. I'm moving to neutral. And so that's what a lot of these folks have done. So just keep in mind, just because they went from not being as bearish does not mean they went full bullish, okay? Now, I want to give a big warning to everybody out there, okay? This is mainly for folks that got in this market in the past year. Listen, a lot of you guys got in at the perfect time. If you got in this market in the second half of 2022 or at any point this year, you have had it very easy. The market obviously bottomed in October and has pretty much been in a straight up line since then. And many of the more popular stocks have done tremendous, okay? Now, what that leads to is laziness. I heard from a lady recently, and, you know, she took the approach of like, oh, you know, I don't need to learn balance sheets. I don't need to learn income statements. I don't need to learn any of this stuff because what I'm doing is working just fine. I just, you know, put money in stocks and they just go up. And I'm just like, you have no clue on what's coming and how bad you're going to be hurt. There was the same exact approach people took at, you know, the people that came in kind of the Rona crash and started buying in, you know, April, May, June of 2020 and kind of got that huge boost up in the market, right? A lot of those people thought, why do I need to learn anything? Why do I need to learn about a P/E ratio and how this works and how to value a stock and how to project growth in a stock and what margins are and why margins can move around and what can affect those margins and why should I learn about business models? I just put some money in stocks and I just make a bunch of money. And this leads to huge amounts of laziness. And I just see from some of these folks, I'm like, they will pay the price. When will they pay the price? I don't know. Maybe it's 6 months from now. Maybe it's a year from now. Maybe it's 2 years from now. Maybe it's 3 years from now. I promise you they will pay the price. They will end up underperforming the market long term. They're going to get caught into a lot of bad habits. The best times to usually get started is in a tougher market in general. I got started in 08, 09, right? Obviously, we know what was happening during 08, 09. Great financial crisis, a lot of fear in the market. And I just got started with a lot of very good habits in like learning to read investor reports, annual reports, 10Qs, income statements, balance sheets, right? Like the important stuff that you have to learn, conference calls, all this stuff. I got started in very good habits, and I carry those habits 15 plus years later, even after all my success and all the money I made and all those sorts of things. I still doing the same exact stuff. I'm still going through all my company's reports every single week. Still going through conference calls. Listen to conference calls sometimes 2 or 3 times. Listen to investor presentations. All the fundamental work you need to put in to be successful long term. And so if you're somebody that just got in the market in the last 6 to 12 months and you think this is just easy, I don't need to learn anything, you will pay the price. I promise you that. And ask the people that got started in the market in 2020 that were like, I don't really need to learn any of this stuff. I'm just put money in stocks and they go up. Oh, it's easy. They paid the price, and they paid the price handsomely. And you will pay the price as well if you don't know what you're doing in this game. The ones that know what they're doing make it through the bear markets. I made it through that bear market. It was ugly. It slapped me around nasty style, but I made it through to the other side. The ones that don't know what they're doing, they don't even make it to the other side. And they have to leave investing or they give up on investing. You've got to know what you're doing in this game, or it will come back to bite you in a substantial way. So make sure you're constantly learning, okay? I put out free workshops for you guys all the time on the channel. Make sure you're getting access to those, okay? Elf Beauty, the stock is spiking huge after hours. I've seen it up as much as 17%. There's going to be a lot of talk about this stock's going to 150 now at this point in time. That's going to start building. This stock's done us tremendous even before the move that's going on after hours. We're already up 1,500% on this stock. Now, I'll be honest, every time the stock spikes, it is a very bittersweet experience for me. And I mean a very bittersweet experience. And if you haven't been watching this channel for a long time, basically I used to own nearly 10,000 shares of Elf Beauty. Stock went up a lot over time, and I took profits instead of just letting the baby ride like I should have done when the fundamentals of the company are just getting better and better and better. There's really no reason to sell other than, well, I made a lot of money, and so I'm like, yeah, I own 1,000 shares here today. So I'm prospering. I'm doing well, right? If the stock's up 17% tomorrow, I'm going to be up probably $20,000 plus in the stock. That's great, right? But on the flip side, if I held all the shares I used to hold in this stock still today, the gain tomorrow would be a six-figure, if not multi-six-figure gain tomorrow, okay, in one trading day. And so that's why it's a little bit of a bittersweet experience. Now, the numbers are shocking out of Elf. Absolutely shocking. The company came in with 76% sales growth. How many companies do you know that are growing revenue 76%? There's only one other company I can think of that's kind of growing in that category, and that is Avant and probably NVIDIA. NVIDIA is probably going to be 60% somewhere range of growth, right? But there aren't many companies in the entire stock market that are growing at this sort of level, right? 50% growth was expected by Wall Street, which is still an insane number. And they blew Wall Street numbers out of the water. I mean, it's not even close. If we look at this, right, and a lot of people wonder, like, is Elf even still a buy, right? Well, these numbers kind of tell you, like, the stock is actually still a buy, which is shocking. Net sales came in at $216 million, as versus $122 million at the same time last year. Cost of sales of $63 million versus $39 million at this same time last year, right? Gross profit came in at $152 million. $82 million was a gross profit at this time last year. Selling general administrative expenses that went up, but that's, when you have revenue skyrocketing like it is, that's kind of expected, right? Operating income came in at $60 million versus $21 million in the same quarter last year. Income before income taxes, $59 million, and net income $52 million. That's versus $14 million at the same time last year. So we got revenue skyrocketing, we got margins continue to skyrocket, and we got net income going through the roof. They also just upped all their fiscal 2024 outlook. They're upping their net sales to somewhere roughly around $800 million now at this point in time. Adjusted EBITDA, $170 plus million of adjusted EBITDA, adjusted net income $125 mil to $127 mil, and adjusted diluted earnings per share of $2.19 to $2.22. From there, already had a pretty strong number, $1.73 to $1.76 now at this point in time, right? And it's been extraordinary. One of the frustrating things for me with Elf is it's a very lonely experience. It's very lonely. Not a lot of people own Elf stock. And it's just like, this is one of the most phenomenal stocks in the entire stock market, literally.